Hey everybody, this is Eric Sandstrom
Lucas McGrew.
and we work with a company called Prime Lending. Prime Lending's backed by a nationwide bank called Plains Capital, so we're able to originate in just about every state in the nation.
We have 400 home loan options to go through, and today we're just going to talk about one of them.
Yeah, so today we're going to be getting into bank statement home loans. So let's get into the nitty gritty. So bank statement home loans are what we call non-qualified mortgages. Now, there's other loans that are called qualified mortgages. Now, what's the difference between the two? A qualified mortgage is your typical Fannie Mae, Freddie Mac, FHA, VA home loan, where you're going to supply all the documentation. You're going to be giving W-2s, pay stubs, taxes if you're self-employed. So you're basically going to be showing everything. A non-qualified mortgage is a little bit different. On a bank statement type product, you don't supply the taxes. You don't supply W-2s or pay stubs. We strictly look at the past 12 or 24 months of your bank statements to determine what your income is. Now that we've talked about a brief introduction about the bank statement home loans, let's talk about who can benefit from them.
So the people that can benefit from this are pretty much anybody that has non-traditional income. Anybody who's self-employed. We've done a wide variety of different kinds. Eric, if you want to cover some of those.
Yeah, we've done truck drivers, actors, wedding planners, people that own nail salons, hotel chain owners, construction companies, and 60% of our business just happens to be
Realtors.
So they're a huge
Big-
portion of our business,
big portion.
as a matter of fact. So a lot of people can benefit from this. If you don't qualify for a regular home loan, this is the next step before hard money.
So you're probably thinking, what exactly are the advantages to, bank statement loans?
Honestly, Lucas, I think that's a simple answer, and I think that it's really the only option that's on the table. Either than that, you're looking at a much worse product that typically has extremely high interest rates. This product starts at a really low down payment. We'll be talking about that here in a second. But the interest rates that are offered really aren't too much higher than, again, your full doc, your regular home loans, your Fannie Mae conventional type products. So definitely encourage you looking into it if you don't qualify for traditional.
And as far as purchase power goes, can you talk a little bit about that?
Yeah, so with how these products work, we're able to, once you send us 12 months of your bank statements, we send that directly to the investor, and it only takes them, sometimes I've had literally it done in 3 hours. The investor will come back and they'll say, all right, the income that we validated is this. So we already know literally what your income is and what you're going to qualify for before you go out and make an offer on a house. And that's extremely important because you want to make sure that deal is going to close, right? You're buying the most important asset typically of anyone's lifetime.
So Eric mentioned that most people send 12 to 24 months of their bank statements to qualify for these mortgages. And Eric, they're probably thinking, what is the underwriting process like?
Easy question. So much different than your conventional home loan. You're going to be looking at submitting basically a typical application, only we request that you leave the income at zero, because if you say your income is a certain number, and let's say the investor might not agree with that, they might say your income is higher. If you input an income number in there, they're going to use that figure. But if they come up with their own calc, that's what we use. That's what's validated, that's what we use. So, unlike your regular home loan where we ask for pay stubs, W-2s, we get bank statements, we have you take a loan application, and we also check to see, in regards to the business, how much ownership interest you have in the company. So if you have 50% ownership, which that's actually required, that's going to be a different calculation and if you had 100% ownership interest in the business. So that's the main calculation, I would say, is we look at the bank statements, how much debt you have, and then from there determining what you qualify for.
So we know that most traditional home loans have a 30-year fixed term. a lot of people don't know that bank statement loans have similar terms, right, Eric?
They do. They have 30-year fixed as well. Not only that, but if you're purchasing an owner-occupied home, there's no prepayment penalty. If you buy an investment home, that is a little different story.
Of course.
But what we typically do, how many years? We do a 1-year prepayment penalty. That way we can come back and refinance, let's say if interest rates are better on investment properties.
Now, since we have multiple different investors we can go to, there are some that actually have 40-year terms, which obviously makes your payment, that much affordable.
Yeah, and even interest only for the first 10 years, and it's still a fixed product. So, kind of neat.
So obviously there are a lot of different investors and programs for us to choose from. Eric, what exactly do you recommend people bring to us in order to, send their file in a nice, neat manner to the investor?
Great question, Lucas. It's obviously both of our jobs to make sure that we give you the best deal we possibly can. So if you want us to look at, let's say, a full doc home loan, your regular home loan that has better interest rates, prior to looking at, let's say, a non-traditional home loan product, that's what we're gonna do. That's what our job is. So we'll look at your taxes, figure out, we have how many different products?
Got over 400.
Yeah, so we've got over 400 products, so we're gonna find out which one's best for you, or if there's a few of them, give you the options between those and let you and your family choose what's best for you.
So obviously there's a couple different tips that we, can provide you guys with. That is gonna be that a lot of people think when they call a lender, they're automatically obligated to do the loan. That is not the case. We don't charge anything for an application. We don't charge anything for our time. At the end of the day, we just want to earn your business. And the way we do that is by doing a couple of the niche things that most banks and lenders don't do. We do something called a soft pull on your credit, and basically that doesn't affect your credit in any way, and it allows us to actually look at your credit and see if there's anything that we can do to maybe boost your credit when it comes to doing the loan process.
Now, why would you do that, Lucas? Why would you look at the credit and, let's say, see if we can increase the score?
So the score has a lot to do with the pricing you're going to get. So if you come to us and you have like a 660 FICO, and let's say we can boost it to 720, that may make a couple $100 per month difference on your mortgage payment very easily.
Yeah, and it could be something simple that you would never have known to do, and you never want to guess what to do on your credit. Sometimes people think, well, you know what, I'm just going to pay off all of my debt, and you may not have to do that. This system will literally tell us what you need to do, and it doesn't cost you a dime to do that.
So Eric, you mentioned the down payment was low. How low are we talking?
We're talking pretty low. It starts at 10%.
Oh, wow.
So 10% down, and it really depends on your credit score. So if you've got a lower credit score than, let's say, 680, and you get down to 660, 640, that's going to start to require more down. Typically, let's say 10%, maximum maybe 20%.
Sure. And that's for owner-occupied properties?
Owner-occupied, investment, second home, any occupancy type can be utilized for the bank statement product.
Wow. Which is really competitive given that, 15% down is required for traditional home loans. 20% down can get you in the door for investment properties with this program. That's really cool.
Yep.
So, first thing you got to do is give us a call. A lot of people wait until, they're about to buy a home, they try to get pre-approved, for whatever reason it doesn't work out, and next thing you know, they lose out on the home that they wanted. So first things first, give us a call, let us determine what we can do to help you guys anytime.
Even if you're in contract and something happens in the middle of escrow, you can reach out to us. Ideally, that's obviously not what we're looking for, but our number is yeah, it does happen. Our numbers are here, and please make sure to like and subscribe and comment on the video, and if there's any questions that you have about the product, we can answer them in the comments as well.
Thanks for watching.